Joe Tegay of Equity Armor Investments is here for the Trader Rundown. Hello, Joe. Describe what you see with the S&P 500 action.
Thank you, Angie. Yeah, we're watching this S&P 500 really hover around the 2,500 level. The 2,500 level in the S&P 500 appears to be a magnet. If we're above it, it gets sucked back down to it. When we're below it, it gets dragged up to it. So it's really something I'll be watching it. I think the longer the S&P 500 is on one side of that, the more clarity we'll have. Certainly, if it stays below that, I think the more likely we will be to test the lows of 2140 in the S&P 500. So that said, currently, we're at 2,500, and the VIX is at 56. The last time we were at 2,500, the VIX was at 69. So volatility expectations have come in a lot, and I think that big deal of that is, of course, the bailout package is out there. The worst case scenario is off the table for a lot of companies that are not going to go bankrupt. So I think that's good, and we're also talking about more stimulus on top of that. That said, I think the market needs to buckle up for a month or more of it getting worse before it gets better. On two fronts, of course, the COVID-19 front, it seems like we're probably at least 2 weeks away from it cresting and the number of new cases increasing percentage starts to increase at a lesser amount. So that's kind of a really troubling statistic. So we have to be prepared for that mentally. It's going to be really ugly. 1,000 deaths a day could be possible for the next 2 weeks. So that just seems really rough psychologically to be able to handle. Also, the economic data is going to get worse before it gets better too. The numbers right now are not as bad as expected, but we're going to see this for a prolonged period of time. It's going to get worse as we go on, so we need to be prepared for that. That said, the market usually does bottom before the economy does, so we're watching all that, and maybe a green shoot could be the VIX is lower than it was a week ago. Maybe that's the first thing that's slightly getting better than it was. So we'll be watching all that. For me, watching the whole market, I think the economy is going to be different when we get out of this. I think we are going to get out of this. The sun will rise again. Spring will come ultimately. And of course, the economy is going to be slightly different though. I think a lot of people who started to work at home are going to stay at home. I'll be looking at chip companies and big tech companies, companies that have cash on hand. A company like Amazon, maybe they'll go out and take advantage of that cash and buy up companies that are doing really poorly. Maybe they have some debt and they can get them cheaply. So maybe Amazon adds their brick and mortar location. Maybe a company like Apple could go out and add to their media portfolio, which they've been trying to do. So certainly going to be a different economy. I think that I like the big tech coming out of this.
Thank you, Joe.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.